Trading is a zero-sum game, meaning that every time you make a dollar, that dollar came from somebody else. So if you're selling in here, I am taking your money. How do you spot a breakout on the open before it happens? We're going to go over that. These are the boxes I had drawn before the market opens. I added a couple in here for some other trades. The main thing you need to do when you're looking at the market open is understand the overall context. And so the market open was right around here on the chart, right around here, 6, 7 o'clock, 8:30 East Central. So what's going on down here? This is the day prior. We have a big old sell push. We have sell continuation. We have a second entry short. We have another short. We have another second entry short, another second entry short, and then the market's moving above that. So we have viable reasons to sell here. People who attempted to sell, people who were in profit for a while when they're selling, and then the market is now moving against them. So that means they're very reluctant, more than likely, to put longer term sell positions on, especially against this intermediate uptrend. So what's this gray box? We see the market's pulling down here, or pulling back from here. Had that gray box drawn before the market opened. It is this inverted area here. This is a 3-minute chart. We have a big delta, or not big delta, big initiative push down, attempt to hold it there. We can draw this box right here and assume that inside of this area there is potentially major resistance. So if we're looking at where should we be careful, where should we be taking profit off or scalping instead of trying to hold for a swing, this is our target area. And I'll pull it a little bit closer to the middle of the screen so you can see it. This is the target area. I've even drawn some words there, nice and pretty for you. So what do we have here? Down to a 1-minute chart. Overnight market. What happened? Why are there green boxes here? There are green boxes here because this is a second entry short right here, a top that should have held. And then if we look at the fixed range volume profile indicator, we have delta bands. Market's holding above the delta band. Here, the market attempted to go below the delta band. Hypothetical sell entry, hypothetical trend reversal, and we see that it went absolutely nowhere and then continues up higher. So we're looking at the market about right here, and I placed a long entry here, and then I took it off a little bit early. Should have been holding for this target here, and then I scalped up in here for a little bit. So how was that done? Well, we are looking to punish, attack, take advantage of all of these very mean zero-sum game words. People who are in bad positions. We know longer term short traders are in a bad position here, so we can use that to spot the breakout before it happens. And then over in here, what's going on? So I'm going to clear all the boxes so we can redraw them. So we have a pullback. Great. Okay, great. How do we know when the pullback has failed? Well, we need a shorter term entry to be misbehaving in the direction of our longer term entry. So what do we see here? There's a initiative push in the up direction here. There's one here. This is the main one. So what is this? I entered right here. How do we know? Well, the idea behind this is that there's pressure building and the market's going to express that pressure. The pressure's got to give. We see that this, if we zoom in, is like a complex pullback with initiative push up, initiative push down, etc., etc. When we go below that, that triggers certain algorithms. It triggers algorithms to now say this is potentially a viable sell level. We see it comes down. There's a pullback here, opens here, comes back in, pullback. We go above it. So now we have reclaimed this twice. We're selling off of what? This initiative push here. It's the same exact thing. Big green candle. There's also one here too. So I'm drawing a bunch of little boxes, but we're getting to the point. We also see that there's a high volume node up in here. So the market has gone under this high volume node. Once it's above that, which we're coming back to it now, that happens later. This entry right here is taken when this short sell is failing. So we have a push below this initiative buy area, a push above it, implying that this now should be, draw your little circle, right here. If this trend was going to reverse at this point in time, it would have reversed right here. And we see the market hits it, goes a little bit lower. Okay, so that's a trigger for certain algorithms that say this is now, on that time frame, in this context, a downtrend. Great. We're in conflict with the longer term uptrend. Let's zoom back out just so you can see it. Market's clearly going up here. We have a fake push below, fake out. and the pressure's building. This is the open. Short sellers are coming in. People who think this is a reversal, they're selling it, selling this high volume area, selling failed initiative push, selling for any reason. And actually the most clear reason right here is going to be this initiative sell push. This one right here. This whole series right there. This little down spike area right there should be a sell level. It tries it. Okay, this is a failure, quote unquote failure. It's a hypothetical looking like it might fail entry. We go below it, we come back above it, you buy it right here. Maybe take off right there, but in this longer term context of having an uptrend, we're kind of thinking that there's a short squeeze coming. So you buy this actually right here because we've reclaimed, underside, reclaim, comes back up, hits here, and then you can just buy that. Now, how do you trade this? How do you take profits? How do you continue to hold? Well, we know that there's a longer term uptrend, and in longer term uptrends, if we have shorter term uptrends, we like to keep runners. The market breaks out, it goes higher. How do we attack these shorts in here? Same thing. There's reasons to sell this. Obviously, someone has sold this. But there's two different types of pullbacks. We have, I don't know, I haven't really come up with words of them. There's ones where it doesn't really go anywhere, like right here. You have a profit taking, they're caused by profit taking. Someone has sold here, there's just not enough volume pushing into this to push it higher. And then we break above that, this becomes support. So these are trapped sellers in here. If we use a fixed range volume profile, we can see there's a delta band in here. You also see that this is a higher volume node. You can really just, especially when the market has these big green spikes up off of that in this context, you can really just buy right here. Okay, that's one entry. You can enter here. Really, the whole premise of this is how do you attack a short squeeze? High volume nodes, and you have to get that context right. If you're attacking a short squeeze and there's no short squeeze, you're not gonna win. Buy this here, okay, great, comes up. Same thing, except for this is a different kind of pullback. We can see, when I say different kind of pullback, this didn't really go anywhere. It just kind of stalls here and then breaks higher. This one stalls here and then breaks lower. So this is another really, really good entry location. If we look at this as a failed initiative push, there's a big push down, secondary push down. Another place to attack this is right here. Right there, perfect. Okay, you can buy that, take it to the top. This one on the simple pullback failed. So now we're looking for a bigger pullback in here. Should you buy this? Maybe. It's viable. It's already tagged that, and we're maybe getting a deeper pullback. In this sort of dynamic, we can look for one back areas. This is one, and then there's one down here. We're underneath that. Oh no, is that a reversal? Well, everybody who is still short bias because their dopamine system got locked onto the wrong context is trying to sell that. This is actually a viable sell as well. You can scalp this because this is a failure of this to hold. And I did scalp this, ironically. And so that we're talking about profit taking again. If you're trading against the longer term time frame, you need to take profits very, very quickly, like here to here. Don't even wait for the new low, just take it off really anywhere. This is kind of dangerous in this environment, but because we have the failure of this, you can sell that. Then when the pressure starts building here, either this is going to hold and it's going to roll over and find more support, or it's going to break out higher, which it did. How should you bet? Hypothetically, not advice. Generally speaking, you want to bet in the direction of the slightly larger term time frame. So if we're trading a 15-second chart, you want to be betting on the direction of the 1 minute chart unless that has clearly failed. So this is a sell here on the shortest term time frame, but we're expecting it to fail. So you can enter in here as we see these tails and the market's consolidating and it comes up here a little bit. You really can just buy this. And if your stop is underneath this level here, your risk reward on this is pretty good. Even from here to here, it's like 1.5 R or whatever. So you can buy this is like predicting this breakout, especially you have a little slight push below, you have a second attempt here. This is going nowhere. Everybody who is trying to bet on the reversal and holding it and not being quick with their profit taking is getting nervous, and then boom, explodes up. Okay, cool. So same exact thing moving forward. We have this as a, you can maybe call it a simple pullback. I'll have to find better words for that, but a break above this, you can just really buy this area. Profit taking has ceased to be the lid on the market. You can buy here, scalp to the top, buy here, scalp to the top, and you see that this is support for quite some time. After we get a move below this, this level is now kind of failing. And this level is now kind of, well, this is now inverted. And you can see that once this failed sell push inverts, it's no good. And then that's actually the reversal for that. And we've got to move way back down, and all of this has failed. And this is a completely different context that this video is not about. One more thing for your trading series. People expect things that are happening to keep happening and miss the context of when they have shifted. So we had this gray box drawn here. The idea is, if you would have bought, it's now red box, if you would have bought this, you're trying to take off up here for 50 some points. If you would have bought down here for whatever reason, all of these, this is a slightly longer term time frame chart, we'll go down to the short one. If you would have been buying here, your target is up here or up here or up here, depending on how you drew your resistance. The point being, once you're moving into major resistance, that's your target, and your execution protocol switches. No longer are you holding for a scalp or a swing through major resistance. Now you're taking profits quickly and only attacking the shortest term time frame and then taking off. So once it starts getting into this area, you see that the market starts pulling back more violently, and then in this slightly zoomed out form of that, you can see that once this fails, it fails entirely. So if you would have been trying to hold this for a swing, that's something that happens when you get trapped in here and you're like, oh no, and now you're just hoping, praying that it comes back up there. Don't do that. It doesn't work. Praying in the markets it's not a good strategy absent of technical prowess. So anyways, that's how you attack a short squeeze. Pretty easy, very straightforward today. Once you understand how to identify context using market structure, it's pretty straightforward. So you identify the context, and then you have like different buckets that you have, like, oh, this is a hypothetical short squeeze. The market is going up, there's failed second entry shorts down here. So then you need to like open up your bucket and like, how do I trade that? And then you have execution protocols. This is one that's very straightforward in this context. Made pretty good trading decisions here. As always, struggling with holding the profits because you have a bunch of money on your paper profits, and it's, you want to secure them. Generally speaking, you have to appreciate, behave in accordance with your system, and just trust it. So hopefully this was helpful. Market context, how do you trade a short squeeze? Like, comment, subscribe, do all that stuff. Thanks for watching.